Interest rates are all over the board this week, and they're definitely higher than where we started the week. So at this point, our interest rates that we have today are equivalent to about the interest rates that we had mid-July. The good news is that the highest interest rates that we had seen in mid-June, end of June, we are still about a half to 3/4 of a point better than that. But we are definitely the highest rates that we've seen for sure in the last 30 days or so. So why is this happening? Two reasons. Number one, the Fed Chairman Powell is talking today, and he is giving some insight into what they think they are going to have to do at the next Fed meetings for raising interest rates to combat inflation. So at this point, they're thinking about 3/4 of a point in September 21 at that meeting, and another half a point November 2nd at that meeting. And then at that point, they will pause and see how that does for the economy. So keep in mind, when the Fed actually raises interest rates, our interest rates, long-term rates, have already priced some of that in. And so typically you'll see our interest rates come down a little bit once they actually do it. But the reason our rates are kind of increasing now is the anticipation of what they're going to do and really what they're going to say about the economy in this meeting. The other reason that these rates are going up is because Biden recently announced the $10,000 student loan forgiveness. So that forgiveness is looked at as stimulating the economy. So anytime you forgive a debt or don't make the consumer pay back something, that's looked at as inflationary and stimulating. So what's interesting to me is you've got one hand of the government that is stimulating and forgiving the student loan debt, and the other side of the government, which is the Federal Reserve, basically increasing interest rates to slow down spending, to bring down inflation and keep a lid on things. So it's very interesting and kind of contradictory to what the economy, what one hand is saying should happen versus the other hand. Either way, it's not great for housing. It is not great for the stock market. And it is definitely not great for our interest rates. That's why they're going up. So if you guys have questions on this, I've been having lots of conversations about where do we see things going? What do we got to do to make sure that clients feel good about things and buying now? Lots of conversations, lots of education, and reach out to us, talk to us about this. We are doing a class in the second week of September, and I am very clear that this is going to be an important class for a lot of listing agents and a lot of buyers agents as we go through this fourth quarter. Because guys, I am crystal clear, this is not necessarily a pricing problem, but we are clearly being challenged with an affordability problem. And how do we fix that problem? Not necessarily with house prices. So we'll send out more information about that, but please do reach out if you have clients that want advice or want education or just want to have a conversation, or if you do, that's what we're here for. This time is going to be really important to make sure that your people are working with people that know, focus, can give them good advice and good education to navigate this market.